Feeling overwhelmed by super trend strategies? Relax, because there's a fantastic solution for traders of all levels that'll make your life easier. You might know about standard super trend strategies, but this one stands out from the crowd. It uses a clever method involving pivot points and their averages, unlimitedly creating upper and lower bands with ATR. This fresh approach sets it apart from other super trend strategies. The icing on the cake, getting started is incredibly easy. Just pop up your TradingView charts indicator section and you're ready to make more profitable trades on your chart, whether you're an experienced trader or a beginner. Alright buddy, it's time to get this party started. You've added the indicator to your chart and now let's make it work just right for you. We're looking at a 5-minute gold chart here, so pay close attention. First off, let's skip the pivot point period option as it is. The default settings will do just fine. Next, change the ATR factor option to 1. And set the ATR period to 2. Now only the buy sell labels option should be enabled. Make sure everything else is disabled. Moving on to the style tab, enable the buy and sell options. Here's the fun part. Set them to appear below the bar for buy signals and above the bar for sell signals. It'll make it super easy for you to spot those signals, trust me. Alright, we're all set. We're dealing with a fantastic buy-sell indicator here, but to create a rock-solid strategy that works even when the market's in a range, we need to master the art of filtering out weak signals. Our goal is to focus on valid, strong buy and sell signals that can truly make a difference in your trading success. But before we jump into the second indicator, let's pause for a moment. If you haven't subscribed to the Trade Genius channel yet, you're missing out on goldmine of trading wisdom. We've shared over 300 profitable trading strategies, and subscribing ensure you'll never miss a bet or any future videos. Plus, you can binge watch our entire collection of videos to level up your trading expertise. Now, back to the strategy. Let's spice things up by introducing the 3 EMA indicator to our strategy, making it stand out and thrive even in those tricky sideways markets. Once you've added the indicator, it's crucial to make some personalized adjustments. The standard settings come with the periods of 10, 50 and 200, but we're going to switch things up by changing the first one to 20. While leaving the 50 and 200 periods untouched. Next, hop on over to the Style tab to add personal touch. Feel free to experiment with colors and thickness settings to enhance the indicator's visibility on your chart. Now, not only will this make the strategy more visually appealing, but it'll also help you interpret the signals more easily. We've made some tweaks to the standard 3 EMA settings and now we're rocking periods of 20, 50 and 200. Here's what this means for our trading strategy. When you spot the 20 EMA sitting pretty above the other EMA lines, the 50 EMA chilling in the middle and the 200 EMA hanging out at the bottom, all the while the price candles are dancing above them, it's a good sign that we have an uptrend. Now let's talk about when the market might be turning downward. Picture this, the 20 EMA is now below all other EMA lines, with the 50 EMA nestled in the middle and the 200 EMA on the top, meaning while the price candles have decided to cozy up beneath all those EMAs. In this scenario, it's a strong indication that the market is in a downtrend. And when the EMA lines are practically on top of each other or appears almost flat, it's a clear sign that the market is in a consolidation or a period of indecision. During these times, it's tough to determine a clear trend, as the market is neither moving significantly up nor down. It's like tug of war between the buyers and sellers where no one's gaining the upper hand just yet. And when the price is hovering above the 20 or 50 EMA but is still remaining under the 200 EMA, it's a sign that the market might be attempting to establish a new trend. However, it's important to remember that the 200 EMA serves a significant resistance level. As long as the price stays below this level, we can confidently say that the market has entered a strong uptrend. A break above this level would provide a more convincing confirmation of an uptrend. In these situations, it's crucial to be patient and avoid rushing into a trade. And when the price is situated below the 20 or 50 EMA but still remains above the 200 EMA, it indicates that the market might be experiencing a potential trend reversal or temporary retracement with an overall uptrend. This is because the price is below the short-term EMAs, which are more sensitive to recent price changes. However, it's still above the longer-term 200 EMA, suggesting the market might still be in an uptrend. And when the moving average lines are sticking close together with no significant gaps between them, it's a signal that the market might be in a state of consolidation or simply moving sideways without a clear trend in either direction. Alright, listen up. I'm going to walk you through a sweet trading strategy using the pivot point super trend indicator combined with the moving averages. When you spot a buy signal on your chart from the pivot point super trend indicator and the signal candles close prices above all the moving average lines, that's a good sign. But here's the kicker. The moving average lines need to be in the right order. That's when you know the signal is legit and you can confidently open a buy order. As for the stop loss, it's simple. Set it just below one of the moving average lines for extra protection. And for the take profit level, aim for at least 1.5 times your stop loss level, ensuring the potential rewards outweighs the risk. You might have noticed that the earlier sell signal that got filtered out. And there's a good reason for that. The trend was still an uptrend, so it didn't meet our criteria. Now take a look at the next signal, which is a sell signal. It also gets filtered out because the trend isn't right for a sell just yet. The next buy signal that pops up would be a confirmed buy signal according to our strategy. Now you'll see another sell signal that gets left out. After that, there's a buy signal, but hold your horses. That one's get filtered out too because it's sitting below the 20 EMA line. The following sell signal also get the boot since the downtrend hasn't been confirmed by the 200 EMA line. Lastly, there's a buy signal, but it's a no-go because the moving average lines are all mixed up and making it hard to spot a clear trend. Alright buddy, let's break down how to enter a sell trade using our strategy. Just like with the buy trades, we need a confirmed trend, this time a downtrend. We're looking for a sell signal that sits below all the moving average lines. Once you spot that, you're good to go on entering a sell trade. As for the stop loss, we'll stick to the same plan as with the buy trade. Use one of those moving average lines as your safety net. And for the take profit level, set it 1.5 times your stop loss level to make sure the potential rewards outweighs the risk. Now you might notice that the buy signal before our confirmed sell signal got filtered out, right? Well, that's because the moving averages were showing a downtrend and we needed to wait for the right sell signal to match up with the downtrend. So remember, patience is key here. Wait for a confirmed signal that lines up with the overall trend before jumping into a trade. That way, you'll have better odds of success in the wild world of trading. And hey, if you're hungry for more knowledge or strategies that are both profitable and straightforward, don't forget to check out the recommended video on the screen. Keep learning and you'll be a trading pro in no time.